Good morning. I'm Ellen Hemmerly from BW Tech at UMBC, and we're delighted to be hosting our second Cyber Innovation Briefing. This is one of our signature events that we have and will have every few months. We also have Cyber Teenies, and hopefully many of you have been to that good social event. I first want to thank Merit Properties for allowing us to have this program in their space. Originally, we were going to be across the street in the training room, but because there were so many people interested in hearing our panelists this morning, we had an overflow crowd. And with that, let me mention, obviously you can tell this building is currently vacant. We are actively looking for technology companies and R&D companies of all different stages of development. We have companies like Telcordia, large companies, I guess Applied Communication Sciences. Steve is here. We have NSA at the park. We have a very strong partnership with Northrop Grumman. And then we also have about 25 emerging and startup companies, many of which who are doing really innovative things in the cybersecurity space. One program I want to mention is the SYNC program, which is a highly competitive program where startup companies can get a full scholarship to participate in our program, and that is a program that we partner with Northrop Grumman. And I think we have at least one of the Northrop Grumman folks here, Jeff. And if you want to learn more about the program, Jeff is here to answer any questions. We also have a brochure in the back. And let me also point out Liz and Vince from Merit. Are you in the room? Okay, they're in the back of the room. They'll be here till about 9:45. But let them know if you'd like to hear more about the space, more about the programs, or you can talk to myself or Allie Gold, and Allie is standing over there. Probably most of you know Allie. Because we are in space that is not currently leased, I see many of you have already taken off your jackets for the men and the women, but please feel free to do so. It's going to probably get a little bit warmer. We apologize for that, but try to make yourselves comfortable. And so with that, I would like to both thank our sponsors and then ask another person to come up to make a few announcements before I introduce our moderator. But we have sponsors and partners without whom we would not be able to do these kinds of events. And I'd like to mention them by name. DBED, Maryland DBED, I know we have representatives here from DBED, the Economic Alliance of Greater Baltimore, Baltimore County, Economic Development, TEDCO, of course Northrop Grumman, Venable, Whiteford Taylor and Preston, SB and Company, and Stiefel Nicholas, which is one of our sponsors who stepped up to be the event sponsor this morning. Now I'd like to introduce Todd Weller. And Todd, it's not a long introduction, and I was going to try to summarize it, but all of this stuff is, I think, interesting, so I'm going to read it. Todd is the Managing Director in the Stiefel Nicholas Equity Research Group, where he covers the software and internet infrastructure sector. Mr. Weller was ranked first for earnings accuracy and third for stock pickings in the software industry and second for stock picking in the healthcare technology industry by Financial Times in 2009, when he was also ranked third for stock picking in internet and computer services by the Wall Street Journal. In 2008, he was ranked second for earnings accuracy in the software industry by Financial Times. Mr. Weller has a BA in economics with certificates in finance and management science from the University of Maryland, Baltimore County, go Retrievers, and an MBA from the University of Maryland at College Park. He is a CFA charter holder. And with that, I'm going to turn the program over to Todd.
Good morning, everybody. It's a pleasure to be here. It's been a little while since I've been back at UMBC, and certainly a lot of growth. I do have to admit that I am a Maryland College Park season ticket holder, so I have to have allegiance on both sides there. So appreciate everybody coming out today. I think we got a great panel, certainly a hot topic. And what I think I'll do is I'll give you a little background on myself, and then I'll introduce the panel, but also kind of give you a little bit of some of the perspective we see. I look at things through the lens of the public markets, and so I'll tell you a little bit about some of the trends we're seeing here. But just before we get a start, obviously great attendance here, but just try to get a sense of kind of who is in the audience and just a few general types. So raise your hand, who in the audience is an entrepreneur or kind of running an early stage company focused on cyber? Great. And how about established companies that, larger established companies that are active in the space? And then lastly, how about just investors or people that are interested in investing in the cyberspace? So good idea, the sense of the audience. So just a quick background on me. I just celebrated my 14th year at Stifel Nicholas, and 7 at like Mason Capital Markets, and then we were acquired by Stifel. I've been following the security space since 1997. I tend to focus more on the product side. I cover companies like Checkpoint Software, SourceFire, WebSense, Symantec, and others. And I have a colleague, Bill Loomis, who tends to focus more on the services side and the Fed IT services companies that are active in the space. So as far as the lens of the public market investors and kind of what are some of the hot themes that we're focused on right now. Some of these are short-term in nature, some are long-term. Really just 6 I'll run through. First, really a lot of focus on the demand environment right now in the face of kind of macro uncertainty. It's been a very tough, I'd say, 2 years from a public investing perspective. Very volatile market environment, a lot of macro uncertainty, and I think just general people have a tough time investing when you wake up in the morning and you're not sure what's going to happen. Some European official says something good, the world's great again like it was last week, and then the next day it could be a Spanish bond auction gone awry. I would tell you from a security perspective, though, it tends to be a more resilient area. I think we've seen that in past kind of tougher periods, and I think that recently came through in 2Q results as well. The second thing would be, network security remains rejuvenated, and I would say in favor among investors. And this is areas like firewalls and intrusion prevention systems and other threat detection systems that have been around for a while. And we tend to see secular trends driving that, data center consolidation, all the movement towards cloud computing, mobile. And another thing that's happened in that market is Cisco and Juniper are 2 companies with significant share that have had significant missteps. And so the pure play security vendors focused on the space are taking share as well. And then we've also had some innovation occur. Next generation firewall, there was a hot IPO a few weeks back from Palo Alto Networks with a new way to go about the firewall. So next gen, a lot of that can be marketing, but that's hot. The third would be endpoint being out of favor, and there's 2 aspects to this. One, you have the traditional endpoint solutions which revolve around PC protection. Trends in the PC market are not very favorable right now. Some of that is secular, as you see iPads and iPhones, and that's creating some pressure there. And then I would say that bring your own device and mobile security are very hot areas. I was at the Gartner IT Security Expo back in June. That was clearly the key theme. Those sessions were all very crowded. The hard part there is it's not really a security issue per se. Security is a feature of a broader mobile management, and it's a very highly fragmented market. The fourth would be virtualization and cloud security. Those are hot, but very early. We're not seeing any of the public companies generate significant revenue. And when we think of these themes, we think of it along 2 dimensions. One, providing security for cloud environments, which are kind of virtualized versions of solutions that are out there today. I think data protection and authentication become more important in those environments. And then you have consuming security as a cloud service. So a lot of security providers offering hosted models or as-a-service models. I think email filtering, content type security is the most popular, but you're seeing it across different areas. The fifth will be continued consolidation. This has been a theme, a multi-year theme within security. Large security companies gobbling up smaller ones with the goal of driving growth. And then you have a continued trend where large technology companies that focus on hardware don't want to be, are diversifying. Hardware is not a great business, and so they're buying software and services companies and security's been, you know, in their sights. IBM bought Q1 Labs about, you know, not too long ago, and Dell recently bought SonicWall. HP's been active, EMC, et cetera. And then the last thing I'll say is just the increased IPO activity. One of the challenges with public market investing in securities, there's been a very limited menu. But, you know, in the last 12 months, we've had Imperva, Proofpoint, AVG, and Palo Alto Networks go public. Qualys is currently in registration to go public. And what I would just say is that from IPO performance, it seems like the enterprise-focused names are very much better than the consumer. For example, AVG has not fared so well, and a competitor, a peer of theirs called Avast, just pulled their IPO in the last 2 weeks due to market conditions. So just thought I'd give you a flavor of the things we're focused on, and it's a different lens than I think, you know, venture capitalists and those focused on an early stage investment. So with that, I'll introduce our panel, then I'm going to turn it over to each panelist to provide, you know, a quick background on themselves and their firm and what they're up to in cyber. From left to right, you know, we got Lee Buchanan, venture partner with Paladin Capital Group. We have Roger Novak, the general partner with Novak Middle Venture Partners. We got Evan DeCourt, a senior associate with Columbia Capital. And then we have Jim Hunt with the Mida Group. So with that, Lee, I'll pass the mic to you for an intro.
Thank you very much. And I appreciate your doing this event because it is a hot topic. You can tell how hot it is by the temperature in this room. It's going to get hotter, so that's a good thing or a bad thing, depending on the air conditioning. Paladin Capital is a firm down on K Street. You can tell us because we wear these long black trench coats and big hats, as everybody does on K Street. We are a venture firm with a twist. We're a venture firm in the respect that we make venture investments, which are typically investments in companies without revenues, but typically with a product at an A or B or C round, if you know that vernacular. The twist is that Paladin specializes in what we call dual use investments. Dual use has lots of meanings. For us, that means a company that has a product or a service that is certainly going to have commercial appeal because that's where the value comes from, but also has a product or service that is sellable into the government. Somewhere, state, local, federal, somewhere into the government, and aimed at making the country stronger. So that was the theme that the firm was founded on about 10 years ago. It was a unique model at the time. It's been become a little bit emulated by others more recently, but it's sort of where we live. And if you look at our list of portfolio companies, there are about 43 of them. We have 3 funds totaling about $1 billion. You'll see that in every case you will be able to identify that dual use theme. So that's the first twist. The second twist is that we tend to be very activist with our companies, very hands-on and very much value add. And the value add that we typically provide is for companies that we invest in that are commercial but not yet aimed at a government customer. Will help that company into the government market. Often kicking and screaming because, as you know, doing business with the government is often not exactly like the commercial market, and so there has to be a little reorientation on occasion. We have roughly 10 folks in the firm. Myself and Alf Andreasen in the back is here to represent Paladin. We do have dry powder. We are making investments, so we welcome a discussion with any and all of you.
So dual use?
Dual use.
I was doing that in '88.
I was doing that in '83.
So we, Novak Middle is 5 funds, about $600 million under management. We're currently raising our 6th. Security has been a historic focus for us. We have approximately 10 active security companies. We invest in really 3 main areas. We do security, we do education, and we do big data analytics, which is all actually tied into security also. And I personally have been involved in the security investing market since the mid-'80s. And actually, the late '80s, I did an operating system to withstand national lab type attacks. and was able to get the government to agree to allow me to take a subset of that technology, and it became one of the commercial firewalls, secure computing. For those of you who are in government, the classified product was called CyBERinnovation. And from that, I was involved with Forteza and Verity, and today we've really gone, and we had a company called Trusted Computer Solutions, which was the leader in cross-domain interoperability. We just sold that to Raytheon about a year ago. We're focused really in the mobile market at this point in time, but we invest across the range of security, including we lump biometrics into the whole world of cyber, because increasingly we think advanced biometrics are interesting. And we actually, we seeded a deal which we brought Paladin and then Columbia into.
So Columbia Capital is a venture capital private equity fund. I mean, I think that our perhaps unique twist is that we tend to be very sector focused. We invest almost exclusively in the CMT market, so communications, media, technology. The firm has a sort of long and storied background in the mobile ecosystem. And so when we think about where is our sort of sweet spot, it's basically anywhere in the enterprise IT or sort of wireless infrastructure sector. So that's everything from fiber bandwidth infrastructure all the way through to the end user in the enterprise IT or personal IT environment. And so, while we do a lot of core infrastructure investing, fiber, towers, wireless carriers, et cetera, we also spend a lot of time on the enterprise IT environment, and that is where we invest in cybersecurity and, of course, other software as a service and big data analysis as well. We're currently investing out of our fifth fund. It's a $450 million fund, and we're still very active in the market. We've probably spent the last 2 or 3 years really spending a lot of time on cybersecurity. I don't think it's rocket science, it's a hot area. There's a lot of innovative work being done in the space. And quite frankly, the number of attack vectors, be it from mobile or tablets, et cetera, are increasing exponentially. And so, as we see the number of high-profile attacks, costing enterprises significant amounts of money, the number of attack vectors increasing, the number of attack surfaces increasing, we have a lot of faith in the sector and extremely bullish in the area. So we're actively investing in the space and also welcome the conversations with anyone who's interested.
Hi, I'm Jim Hunt from the Meta Group. Meta Group is a group of 3 guys whose wives said they could not work at home. And we each have sort of separate and really distinctly different portfolios of activity. In my case, it's primarily angel investing. I have an unwieldy portfolio of a number of startups, most of which face the intelligence community or the DoD special groups. So I always like to say I was In-Q-Tel before In-Q-Tel existed. I started out as a scientist in the Intel community and started a company, merged that, took it public in '91, and it was from that public offering really that I was able to begin angel investing. So I've been doing it since that time, '92 and '93. Back then we called it InfoSec, and I had a number of investments, frankly, in the '90s that related to the cyber initiatives today. I always say I'm so old I actually have exits. So you have to be able to endure a long time in this business if you really expect investments at the stage that I make them to really make their way out of the funnel and have some sort of event. Look at about a deal a day with some sort of rigor. Invest not only unilaterally as a single angel, but also syndicated with 2 or 3 different groups where, in general, I feel that I can't give the attention to the investment that it may need, and so we'll syndicate those and look at raising money through a series of angels, and sometimes coordinated and partnered with venture capital groups. But we are at a stage typically much earlier than my colleagues on the panel. I always like to say I'm an angel with a very short wingspan, so I'm not putting out millions of dollars, typically have in some cases, but generally hundreds of thousands, and if we syndicate perhaps $1 million into an earlier seed round. Right now, with respect to cyber, have a number of properties that I personally have been invested in, and also some that we have syndicated. What's intriguing, of course, is that sometimes the hype is better than the actual results of the company. You're seeing a number of roll-ups in the space who are trying to pull in early-stage technologies that they think will allow them to build a portfolio. Rapid7 is an example. CloudStrike is another example. I've had a couple of companies that they've come after very hard. Companies, frankly, that are very early, and it's probably hard to get the right valuation on an exit out of. But they're hot and they're interesting and they fit a niche within those folks' portfolios. So lots of activity in the market. I think it's still a little unsettled how the market will shake out in terms of real buying patterns in both federal and commercial. But it's clearly an incredibly hot topic. And apart from what I see, and probably big data has some of the most startling valuations that you'll see in the really early stage companies. So it's a it's a great area to be in. We'll see how it matures as a market going forward, but I think if you're in the space, you can rest assured that you'll do very well.
Great, thanks a lot. So I figure one thing that would be helpful to start out with is to kind of get a baseline for how we define cybersecurity. We've seen it tends to be one of these terms where you can have narrow definitions to broad definitions. So different things to different people. So I guess we'll start out, Lee, kind of how do you define cybersecurity? What do you think of in that context?
Any company that is based on a series of ones and zeros that has value and can make me money is cybersecurity.
Well, that's everything. So we look at everything much the same way Lee does. Cybersecurity in a digital world is really across the spectrum. So it's everything from identity management, biometrics, straight InfoSec, which Jim was saying was the old way of talking about it. So it's a very broad solution, and I think there are niches, and people determine what niches they want to play in.
Yeah, I think that is. Yeah, I think that's generally true. Unfortunately, cybersecurity is such a wide area. I mean, it's very difficult to just narrow down into sort of a sentence. It is basically the hardening of network assets, the protection of identity. Unfortunately, I think as cyber has become very hot, the water's been muddied. So very bland IT monitoring. Network monitoring has become cyber now, and I'm not really sure that's exactly what it means. But then again, it can't be excluded either. So unfortunately, I don't have a lot to add. It is very broad.
Evan, how important is we've come across sometimes people hear cyber and they think Fed government as a narrow definition. But how important is Fed government versus kind of broader commercial to how you think about cyber?
I don't think that the actual, the end customer is as relevant to us, Columbia's investors. I do think it's one of the few areas where a government stamp of approval actually is meaningful, and it actually adds value. Generally speaking, I think this is to a large degree changing. The federal market has been a difficult place, as has been highlighted for commercial serving companies to go. And it does feel like in cyber, stamp of approval from the intelligence community especially is actually worth a lot and demonstrates some significant credibility. So I don't know if it actually matters in the sense of how we think about it. Does it classify as cyber or not? But I do think that we're seeing more and more real, interesting, quality, innovative companies coming from the government services space.
I might pose a question. How many of you have been scammed on a credit card at some point in your life? Today, what the financial services groups do, and they're beginning to change this, but is they just sweep it under the carpet. So they reimburse you if you're a good customer and don't really talk about it much. And I think it was last year that someone said the The fraud business, online fraud business, went over $1 trillion and went beyond drugs as the most profitable and most prolific criminal activity on the planet. So I think that most of the commercial enterprises have been relatively slow to want to pay anything to protect this. Now when they look at massive losses of intellectual property and other issues that they're facing, you're beginning to see that free up. Whereas the government, for obvious reasons, spending a lot of money on this space and will probably continue to. The problem with the market, I guess it's great for a small company, I'm not sure about the larger ones, is that you have to stay so nimble to stay ahead of the bad guys who are working with an awful lot of IR&D money when you have $1 trillion business. You have to work awfully hard to stay ahead of them. So it's a constant battle of staying ahead of them, which makes for a great business and a great market. But being nimble is really, really critical, and having very bright people that can understand what's going on. So everything that relates to that, in my view, is the definition of cyber.
Roger, keep that. We'll go with you for this question. So, and I'll speak loud. If you need to use the mic, just raise your hand and I'll do that. But I tend to be very loud. But Roger, how do you think investment in the cybersecurity market is trending? You know, upward, steady state, kind of downward. What's your perspective there?
I think it's trending up again. It sort of reached a zenith in the early 90s, when I think there were something like 350 venture-backed cybersecurity companies, maybe 40 of which became relevant. So you had a lot of VCs burn in the 90s, and they tended to leave the market. I think that as computing has changed and cyber has begun to get so many headlines, you're seeing more people begin to take an interest in this space. I think from the federal government budgets, I think cyber security is going to be okay, but Lee has a interesting look on the budgetary process.
Yeah, Lee, I think your perspective there, especially with the president's budget, I think is indicated to be down 1% or so, and just how do you think of kind of the trend of investing here and how budget trends, both from a government, impacts that?
Well, we were actually having this conversation just before we sat down. I left the Pentagon. I was Assistant Secretary of the Navy for Research, Development, and Acquisition, ending in 2001. So that's like 10 years ago. It's interesting to note now that with all of the doom and gloom that people are talking about, if the worst happens, and that means sequestration in its complete extreme, if that happens, the reduced budget will still be 50% higher than it was when I left the Pentagon 10 years ago. So this is not the sky is falling. Furthermore, the federal government is going to emphasize cyber as one of its highest priority targets. So it may well be that you're going to see the budget in cyber go up. I just came from a conference last week in which, at which General Alexander, he's got an office down the road here, was asked his assessment of the extent to which the government in particular and our society in general is vulnerable. And he said, well, on a scale of 1 to 10, 10 being absolutely secure, 1 being not at all, the government is about at a 3. So he is not at all confident that we're there, and the threat is real in his mind, and he's going to be a great champion to keep that budget high. I would certainly much rather be in the cyber business than, pardon my Lockheed friends, building F-35s. That's going to come under severe attack.
Evan, Columbia does a lot of, you're in a lot of areas from an investing perspective. So, how do you view cyber market, cybersecurity market, the investment trend, and maybe talk about the relative attractiveness of opportunities from your perspective relative to the other areas of software and tech that Columbia focuses on?
Yeah, so I do think that cyber is trending upward. It is an incredibly hot area, and with good reason. Generally, the enterprise and government are not prepared and are not sufficiently protected. But I do think the other trend that we're seeing is that the valuation expectations attached to cyber investments is really inflated. Or inflating rather. Part of this is, to Jim's point on big data, anything that gets labeled cyber is now very hot. And even though, no matter, it takes a lot more work to actually disentangle who is doing really interesting and innovative stuff from people who are just doing sort of, cyber network monitoring or otherwise, generally bland, not particularly interesting IT services. So I do think that is one of those trends. Anything that's labeled cyber all of a sudden is much more valuable, and as a consequence, just takes a lot more work to really understand, what exactly is their value add and how interesting and unique are they.
Jim, your perspective on where it's trending and relative attractiveness?
That's a great, it's actually a great series of comments from all the panelists. That I was asked to do due diligence on a company of maybe 150 technical deployed people into the government services primarily. And they claim to be cyber experts, and when I went in to really look at it, yes, they were system administrators who'd gone to a course and thus were declared experts by themselves, I guess. So you're seeing an awful lot of branding that may or may not be accurate. But one of the comments I have with respect to sequestration or even just general budget issues is I've always been a technology product investor. I've not been a services investor. And I fight constantly with the services guys because in many cases the technology, if deployed, would reduce the services content delivered by a contractor or done by a government employee. And I see this all the time, and we are fought on that issue all the time because it doesn't make sense for a giant integrator who's got lunch buckets of people, going into different agencies to bring in a technology that may in fact reduce their services content on a contract. But that's coming. I've said it's been coming for 5 years, but I really believe it's coming. So those that have technologies that can radically change the ratio of services people in the contract base, I think will fare very, very well if and when we see budget cuts.
Evan, that brings up a question I had for later, but I think it's pertinent now. Just when you think of cybersecurity and look at the investment opportunities, talk about the relative attractiveness of products, companies focused on products versus services, and how you see that.
So I do agree with Jim that regardless of what happens with the budget, there will be pressure on the butts and seats model. We cannot continue to have these huge contracts where incumbents just generate additional seats on the contract, sort of doing mundane work. Products will have to be introduced to introduce efficiencies to the process more generally. I think institutionally, Columbia probably is a little bit more focused on services. I think to a large extent this is driven by, not an unwillingness, but an interest in basically betting on a larger trend rather than a specific technology. So I think for us, we view services probably as a little bit more attractive and interesting. I also think that just culturally, that maybe is a bit more of an East Coast phenomenon. People are more comfortable with the services business in general. So I think products and services, what is the relative attractiveness? I'm not actually sure you can make a comparison. I think it's just, quite frankly, just a different risk-return profile and a different investment style.
Roger, Novak Biddle, your perspectives on, looking at product opportunities versus services, and whether what you find one more attractive than the other.
So we have historically been product people. We think services are lower margin. In fact, if we get a company that is predominantly services but has some interesting technology, we try and flip the mix. One thing that's pretty interesting, that what we've grown up doing has actually been sort of walking the halls of various government agencies looking for technologies that can potentially be repurposed or brought into where there could be a commercial analog, much like what Lee was talking about. And we've found all sorts of things that are really, really interesting that are in government labs. So the Get Naked machine at BWI that you walked through, that was actually came out of Intel Northwest. Lee and his firm Paladin and us did that. The secure computing, the technology of that actually came out of NSA. We've taken a lot out of DARPA. DARPA has been just an incredible resource to this country. So we look for really interesting technology that can be productized where there's a commercial analog.
Yeah, I think it helps to sort of remember some history here in terms of services, and I was sort of involved, but I won't take any of the blame. You remember in the 80s, there was this push to actually, have people leave the government and go into the private sector. And it was posed as a way to save money because they wouldn't have to pay overhead, they wouldn't have to pay retirement and so forth. So there was a mass exodus, not very far, because what happened was the government still needed those services, and the really highly trained people sort of started their own companies, and the service sector was born. Well, it turned out the government recognized it didn't save a lot of money, but now it's got the service sector that actually performs services that the government can't do. The talent is gone. So yes, there's going to be a movement to reduce the level of personal services and general service organizations, but the government is now in a position where it can't hire the programmers, it can't hire the executives, it can't hire the services to be government employees because they can't pay them and they can't find them and they can't attract them. So it's between a rock and a hard place, and that's going to serve as a buffer. So the very highly skilled service organizations, I think, are going to do well. The organizations that specialize in making view graphs and serving coffee, they're not going to do well. So that's where the flux is going to be always. So it's not quite as bad as people make it, but it's going to be an effect.
Lee, when we think about kind of key drivers for the market, a lot of times we think of government and potential kind of regulatory or policy drivers. Not sure there's some panacea there, but are there any policy drivers, regulatory drivers you see pending that could make a difference to the market over the next few years?
Well, I won't comment on the legislation that is pending today that is being very hardly pushed by the government, but I'll just speak overall. And to this audience, this is a very sophisticated audience, so this is going to be redundant. It comes as a shock when you say these sort of things to the West Coast guys. The Einstein program, as you know, is a program that sort of puts Fort Meade and the Department of Homeland Security in the driver's seat in establishing the building codes and standards for what the cybersecurity landscape is going to look like. So they're going to make the policies, they're going to establish the standards and the measures by which cybersecurity products and services are delivered. So the .mil is going to be, as you know, the first effect, and then it's going to move there to the .gov and ultimately to the .com. And that movement and the policies that are behind it are going to be extremely influential in the way the cybersecurity industry sort of turns out. And that's very different than some other industries where, for instance, semiconductor industry, where the government was involved early on and very effective and then sort of bowed out. The government is going to continuously be a driver, and that's going to make the East Coast companies much more effective and much more influential than the West Coast, again, in contrast to the semiconductor world.
Yeah, to Lee's point, I spent, I'd say, probably the first 8 to 10 years of my venture life investing on the West Coast, principally on some chip companies that were involved in encryption for the various agencies. And to this day, I think there's not an appreciation of the role of the U.S. government in driving standards, particularly in the cyber world. I mean, there are a few people who get it, like Ray Rothrock, who was at Venrock. He actually did Palo Alto Networks, and he had backed the Israeli company that's the firewall, second firewall, to come out. So there are few guys who understand the process. But I'd say over my 20 years, I've been asked by various people, would you go clue in these guys as to how this works? There was a group out of Silicon Valley, for example, who came here with the idea that they were going to introduce a cybersecurity plan for the country. And whoops, they didn't talk to NSA. And I said, have you guys talked to NSA? Well, no. Should we? I mean, that's the kind of approach. And yet, if you look at the computer industry in general, it was really ARPA and DARPA which drove that, and NSA also.
Yeah, absolutely.
NSA created the supercomputer, really. So I think the East Coast is going to rise to prominence, particularly in this area.
Evan, your perspective on drivers, and maybe just beyond government, other big drivers that you're focused on.
So I would say generally I agree with others that innovation will come out of the government, in particular the intelligence community. What I personally view as the largest driver, especially in the commercial space, is just the visibility of attacks and the visibility of those outcomes. I think generally, I think that the largest driver of the push for cybersecurity in the enterprise IT environment is probably not necessarily the sophistication of attacks, but just the visibility and vision cost, or even the inability to measure the true cost of penetration or IT compromise. I think when you look at the major attacks over the last year or two, a lot of times these aren't actually particularly sophisticated attacks. So they're SQL injection or something else that we've seen time and time again, insider threat issues. It's not like these are really, there are very, very hard problems in cybersecurity, but I think some of the hardest problems that we're dealing with are actually some of the simplest cybersecurity issues. People leaving out passwords, or people not appropriately securing forms on an open website. So to the extent that we actually see these large compromises, even with very simple attacks, that is what will end up driving innovation and driving demand in the commercial sector.
Jim?
So an interesting happening, I guess, 6 months ago is when the SEC began to first sort of shout across the bow to public registered companies that they ought to think about disclosing when they have some kind of cyber attack. And in the parlance of the SEC, this will take 3 or 4 years before it actually becomes a mandated issue. I'm an investor in a company that chases malware in the wild, and we can actually tell a company that they've had a cyber attack by looking at the export of the malware. So, of course, my neighbor is a former head of enforcement at the SEC, and I went and talked to him about that, and he sort of fainted and said, yeah, but it's going to be the actual company that has to declare this. We don't want an outsider doing it. So then, a few weeks later, we had a really major law firm approach us and say, would you give us information, and we'll begin to spawn class action lawsuits against these Fortune 500 companies that have a malware leak. And I said, I don't have enough liability insurance that I could buy in the world to even think about that. But I think it tells you what is going to come. At some point, you're going to have mandated, for shareholders, you're going to have mandated issues on cyber having to be revealed by the respective company you've invested in. And I think that'll happen, but it will probably, because of the way the government implements these things, take years, many years, before it changes from a you ought to tell us how you're going to do that.
Yeah, I would just add that from our seat, advanced malware protection is an area of definitely increased interest, trying to deal with zero-day attacks. At the RSA conference this year, that was one hot area. There's private companies there. FireEye and Damballa come to mind as kind of the two hot companies. They've received a lot of attention, not only there, but at the Gartner Expo at IT Security. And then a lot of the public companies are targeting capabilities. Palo Alto Networks has their Wildfire capability, where they can send an executable up to the cloud and see if there's bad stuff in it. SourceFire has their endpoint solution. They call it FireAmp Checkpoint Anti-Bot Blade. So a lot of activity in the space. It's hard from us on the outside. It's small today, but the debate is your classic. Is this a feature or a standalone kind of solution? But I wouldn't be surprised to see FireEye or and or Dembala acquired over the next kind of 12 to 18 months?
I hope so.
I bet you do.
Then it's a good company.
And it's a good company.
Turn it over to back to Lee here, but when you think of kind of the risk profile of investors in the cybersecurity market, how would you characterize it? Aggressive, conservative, and are there any changes you're seeing?
Well, the number of investors in the cyber market is really small compared to other sectors, and so the deal flow, as in any venture investing, deal flow is king. So the aggressiveness is always the aggressiveness in finding deals that others don't see, and the risks that they're willing to take. And I think, as Roger mentioned, there are a few companies that have really mouth-watering ideas and new technologies. There's a much greater number of companies that are trying to take existing technologies and apply them, sort of in the broadest sense. Depending on how that works out, it's not clear whether you're chasing the really great technology or the really great business that's going to put that technology on the street. So the aggressiveness is often tempered with sort of a continuous survey of the market and particularly the CEO of the company that's going to make all the difference.
Yeah, I would add, I think probably 90% of companies we see, Paladin sees, they come through the door looking for people who've been in the area. And we tend to co-invest in a number of different situations and share data. I mean, Lee and I are both interested in mobile security right now. And very different agencies have different efforts. The commercial world has different efforts. And it's really tough to figure out who's going to be the dominant technology player because it's so nuanced. And then you have the carriers in the mix. You're going to get the carriers to buy in and support one over another. So it's just a very, very complex area. But I would say there is a group of people who tend to look at a lot of deals and also compare notes.
In mobile security, like I said, the mobile management, it's very fragmented. You look at the Gartner Magic Quadrant, there's over 100 companies that are listed in there. And you have companies from Symantec and McAfee playing in the space, SAP via Sybase. It's just...
But some of the best are not there.
Yeah.
That's the important thing. Some of the most innovative technologies never make it to the Gartner list because people stay in stealth mode.
Yeah, before I came into this business, I didn't quite have an appreciation of sort of the lay of the land. Let me just illustrate, and I mentioned that deal flow is king, and I would be surprised if everybody at the table here didn't have the same general experience. Last year, we saw, as a firm, and there's 10 of us, 800 deals. 800. Of those, we did a second look at probably 150. Of those, we did what I'll call deep due diligence on 40. And at the end of the day, we made 4 investments. So that's 0.5%. Yeah. So that's the typical, and I think that's typical among us. That's sort of the lay of the land that you look at. To go from 800 to 4. It takes a lot of scrutiny, and frankly, we miss things. But you do the best you can, and the law of large numbers sort of helps to take care of the rest.
Evan, how about your perspective? And then, as far as kind of, you mentioned kind of valuations being up there, cyber and everything attached to that. It sounds like the pool of investment dollars or investors around the space, I think was indicated to not have moved all that much. So maybe talk about other factors that you see driving kind of those valuations.
Yeah, I mean, I think just to touch on who ends up on the Gartner list or any of these research lists. I do feel like to a large extent that is essentially a marketing exercise, and it's not necessarily indicative of the quality of technology. I mean, there are very good companies on the list because there are innovative people doing really interesting stuff, but the exclusion from that list does not disqualify you from being an interesting company doing interesting work. In terms of the number of people, I do feel like there are more dollars chasing fewer high quality deals. But I think that that is just generally an industry trend more broadly. That I don't know if that's specific to cyber. But as people move from hot topic to hot topic, cyber today is interesting to lots of different people. So you end up seeing a lot of dollars chasing the same opportunity, and as a consequence, the price goes up.
Jim, any perspectives there?
Well, I don't disagree with the ratio of deals looked at to deals done. We're probably a little bit different because we're chasing a little bit different spectrum of the market. A couple of points. One is I've had a couple of consumer products plays that aren't really so cyber related, and these guys could not raise money in this town to save their life. And in one case, they moved to Boston. I actually tried to make an investment in this company, and they moved to Boston. They outgunned me totally with folks up there that were interested in investing at an evaluation much different than mine. And in the case of the couple companies that have moved to the West Coast, literally packed up and moved, they've done much better than I think they would do were they sitting here trying to raise money. The one thing I will say, and the Paladins and Novak Biddles of the world always scare me because they can clearly outgun me, but there's not near the emphasis in this city that there is in Palo Alto or Silicon Valley, and the valuations hence are lower, which for somebody like me is not all bad. Because I think cyber and things that relate to, that may have spawned themselves out of government markets tend to be looked at differently in the Valley than they do here, and they tend not to get the type of hype that you would get in this city because we understand it better.
That's why we like to make this interactive, so like to take questions from the audience. Anybody have a question for the panel? Start there.
Yeah, hi. What technology do you think needs to be invented that really has the potential to make the most impact and the most money that doesn't exist right now?
Any future.
I won't. I'm not sure I can sort of come up with the technology, but I will. An area that I think is interesting, in that there is a lot more work to be done is in virtualization and hypervisor development. It feels like the just incredible strides have been made in the space over the last 10 years. The overhead of actually running a virtualized environment is much lower than it has been in the past. And I think the nature of securing a sort of new mobile or, quite frankly, cloud environment will require a more nuanced virtualization strategy and virtualization architecture.
We're actually, having grown up with the walled garden approach, which everybody seemed to think would protect them, where we just had higher and higher walls and then more of them, that paradigm needs to change. So we are investing now in people who are taking what I would call a proactive security approach. So we are looking at everything from the I guess the vantage that every network is compromised to some extent now, even your internal networks that you think are probably safe. So the companies who we're backing are going out with, say, some agent technology, looking for any abnormality, and if there is any abnormality on any device, they will immediately contain it, remediate it, and remediate every machine. Now that's a change. The change is that no longer are we looking to invest in putting up walls. We're looking at discovery. And once discovered, so hunt, kill, remediate. So that's just a paradigm change.
Yeah, that's a hard question for me, and I'll tell you why. Because I'm basically a techno nerd. I spent 13 years at DARPA. So until, for a long time, technology was for me the center of the universe. And what I've observed later is not that. That in fact, there is more technology out there than can be ingested into products that are going to become influential. So the invention of technology is really not the driver. There's lots of it there. Now there's some enduring problems. DARPA invested in artificial intelligence and automatic target recognition and natural language understanding and all of that for decades. And the progress that has been made is tiny. But the influence could be huge, right? But more influential, at least in the near term, is going to be the use of existing technology in ways, that actually affect our lives. And I would point to almost anything Apple does. I mean, if you look at, the iPads and you're going to find very little technology, in there that doesn't exist elsewhere. But what was done was a masterful job of taking that technology and making it useful. And that's the company that I want to invest in, because it's going to have the profound influence on all of us beyond, somebody that comes up with a particular solution to the Navier-Stokes equation.
And Apple, I'm sure some of you saw this last week, did do a security acquisition, several $100 million for a company called Authentech that did kind of fingerprint scanning technology. So interested to see where that goes. Other questions from the audience? Let's go over here first.
Sure. So I think this question starts with Jim, but probably moves on. Out there on the West Coast, we've seen the emergence of a lot of the angels, the bands of angels, the accelerators like Y Combinator or 500 startups. You can make an argument that that's part of the valuation bubble, but you can also make an argument that you're getting a lot of very lean startups, who are getting a chance to either succeed or fail while they're still very capital efficient. Do you see the emergence of a similarly deep pool of angel investors here inside the Beltway?
No. The angel groups that are here in town are active, but there's not near enough of them. And it probably relates to exits. So I'm a member of a group called Blue Venture Investors, and it's 18 folks that have had exits. And as a result, they understand entrepreneurship and they understand investing in smaller companies because they did it themselves. We don't have enough of that here. We don't have enough Ron Conways or others that frankly have exited, and certainly the Valley does. Boston has more, probably Austin has more. So it's we'd love to have more because I think it feeds the whole industry. It feeds the next rounds, the Paladins and others. But I don't sense that we're ever going to have that kind of interest. And angels tend to be local, so we always get worried that Conway's going to show up in town and put out a shingle, which probably hurts us from a valuation perspective. But it just doesn't happen because most people do not understand the value of the stuff that comes out of the government or has some sort of government halo. That's my opinion.
Yeah, I think the emergence of angel investors more generally is just additional stratification of the private equity or venture capital investing environment. But I would agree that there definitely isn't the same angel environment or angel groups in the DC area, and I actually don't anticipate that there will be for quite some time.
No, I'm going to pass because I think that answered it. I think the other thing is to be an angel for stuff that's resident in the intelligence community. You probably need angels who have tickets to be able to properly vet things.
And just to be contrarian, which is my bent, I would suggest that we do have a very vigorous, very deep-pocketed angel community in Washington, D.C. It's called the federal government. Right? If you combine the budgets, and this is at an angel level, even earlier, of DARPA, ONR, AFOSR, ARO, NIH, you'll get a figure that's like $15 billion a year in angel money. And it's not diluted. If you go to the West Coast, they will not regard that as a legitimate investment. I hope to make use of that.
Yeah, that's a strategy.
Right here?
Yeah.
We'll go back.
This industry seems to be a little different. I've been scratching my head about it. The cyber, 3 or 4 years ago, it would have been a normal industry where it looked like things were rolling up into the big guys, where IBM and Checkpoint and that crew were going to own the whole industry, and there wouldn't be any room for small companies. But it seems like I'm looking at small companies now that are trying to conquer the same problems that 3 or 4 years ago they were getting rolled up into. Is cyber just a perpetual industry? Why is it different?
Because you have to be so damn quick. That's the difference. If you're in the semiconductor business and you have to have an infrastructure that costs $1 billion plus per fab, it's very difficult to be agile. If you're in the cyber business and you're one guy and you're at your house and you're clever, you can move very quickly, much more quickly than the big companies could, and so that's going to be always the engine of this. Anytime that the dimension of change is measured in milliseconds or nanoseconds, the small agile guy is going to have an advantage, and I don't see that changing.
Note Intel owns McAfee.
Right.
Yeah, I mean, I think Lee hit it right on its head. We have a, let's call it an intercept company. Now, every 18 months or so, we get new changes to networks. So we got 4G now. Qualcomm has just announced 5G. So every time somebody changes the configuration of the network, there's a whole new product sale. So you got to be quick to be able to adjust to all these major changes. The big guys move a lot more slowly. And I think historically, the big government integrators would rather build from scratch than buy off the shelf commercially.
Right.
And yet I think you now have agencies who are saying, if I can get 85% out of a commercial product, then I only have to pay for the 15% integration.
Yeah, I think that's an important point. I mean, I think it used to be that people would want to build stuff in-house, and you would basically pay 10 times as much and get 10th the innovation. And you have years or a decade between development cycles, and that's just not acceptable. And I think to this question of what is technology that you think needs to be invented, for every new technology, for every shift in the computing paradigm, there are a new series of issues that crop up as regards to cyber. I always think about like, what is it? What are you protecting against? I mean, if you're just going to put up walls, it's like you own the library and you need to search for every typo in every book and every manual and every manuscript you have, and an attacker just needs to find one. And that's not necessarily a battle you can win, and it's one you need to be constantly guarding against. So with every turn of the innovation cycle, with every turn of the IT cycle, like you necessarily have additional required work on the cyber front.
The only thing I'd add is, and it really relates to the question of the next hot thing, is have any of you heard of Nicira? So, have any of you ever heard of the name Peter Thorpe? Peter's a kind of crazy sales guy. He's been around town for a long time, very successful. Went to work for Nicira because he knew Mark Andreessen, and Andreessen brought him in there when Andreessen Horowitz invested in him. He put $1 million in the company at an early stage, and then he ran their federal practice. I think they got to $5 million in revenue last year, and they just sold this last week to VMware for $1.3 billion. So that's something that if you can invent, that would be the next, that resembles the best of best exits I've ever heard of. I think Andreessen Horowitz made more on that than they did on Facebook. A $5 million company that sells for $1.3 billion. So to all you entrepreneurs out there, there's great hope.
And I would just add that history is littered. We've seen this covering the big security companies and big tech companies, with them being very active acquirers of assets and either not being focused or not properly integrating them. And IBM with internet security systems, Symantec, I could read you numerous examples. HP buys ArcSight, ArcSight's kind of going down. So Juniper and NetScreen most recently. So we'll see. They'll continue to buy. The question is, will they get more effective at integrating? Let's go back there first, then we'll come here.
I'd like to talk for a second. I'd like to hear your perspective on open source software. In particular, relative to hardware, there was a recent announcement of, I believe it was Raytheon won the Fire Scout cutover to go from Windows to open source products. And I'd also like to know your perspective relative to the application developers, in particular in cloud and security and those things relative to open source software. How does that affect small companies seeking investment money? What is your take on the open source software community?
We're actually looking at a open source software company right now that has a new generation, call it appliance type device. And it's actually picking up some interesting clients like HP, like Dell. So we like open source. I was an education investor, and I did Blackboard. Blackboard just bought Moodle and someone else because they were being cannibalized at the lower end of the market by open source. So we think it's here. I don't know if anybody else wants to.
Any other?
Yeah, so this is like saying I'm going to penalize a company because they use calculus. Right? It's open source math, so I'm not going to do that. It doesn't make. I mean, as I say, it's less about the software and the tools than about what you have done with it. Now, we will insist before we invest in a company that there be some barrier to entry for that company to its competitors. Otherwise, there's no real advantage. It could be proprietary software. It most often is not. But as long as something is there, then I don't think that should be a penalty at all.
Question in the middle, right here.
Yeah, there seems to be a logical inconsistency. When you're talking about the success in cyberspace is dependent upon the nimbleness of a company. And then a company grows to a certain point, $5 million, and then a large company comes in and acquires it. It's changed the culture and it's lost its nimbleness. So doesn't it devalue? I mean, there's a disconnect.
The disconnect is that you believe that all acquiring companies are not smart?
Maybe.
I would agree. But as long as they're acquiring my companies, I don't care.
But won't they catch? I mean, at some point, they'll become smarter. I mean,
And they ingest the nimble companies and discover that they still have a requirement for yet more nimble companies, and that's a good thing for me.
I would say what often happens, which is perfect for our business, is the entrepreneur founders have to stay with the large company for 2 years. At the end of 2 years, well, actually I take that back. At the end of about 9 months after they've sat through innumerable management meetings, they're already calling and saying, I'd like to talk to you about an idea I have. So there are a lot of new companies that are created out of bought companies.
Yeah, I agree that this happens, and it's not obvious to me why large companies when they try to integrate interesting small companies totally spawn into the opportunity, but somehow they seem to keep doing it. I don't see any reason why that will stop. At some point, there's some short shelf life, and then the brains behind the product or service leave, and they start something new, and then that also gets acquired. So I don't really see it changing. I think it's sort of it's okay. It's great for us as venture investors. The wisdom of integration strategy escapes me, but whatever.
So I have this is a particular hot button for me because I have a lot of small companies that get, at least are entertained to be purchased by larger integrators in town. And we go to the dinner, and the acquiring company is just unbelievably gracious to the CEO and telling him how culturally this is going to be a great fit and it's going to be wonderful. And I coach the CEO to not believe any of it, and to try to stop them from just going crazy when they arrive, and just to say under their breath, $30 million, $30 million, $30 million, because how do you suggest a guy not exit? And Roger's exactly right. Some of these guys are showing up, and within minutes they're thinking of when their non-compete ends and what they're going to start again. Not to pick on any one group, but KeyW is a great example. Is a great example of that. It happens all the time. If you go to Northrop and ask them about it, they will tell you they bought a contract and it's still of high value to them. So they believe they got the value even though the guys left and started again.
Question in the front?
Yeah, I'll
okay.
Tell one amusing story that is going on with, I guess, one of our portfolio companies right now. They're being romanced by a large integrator who wants to buy them. We're actually going out for an investment fund. The large integrator has had 45 people meet with this company. They have flown overseas to meet with this company. Now, what it's really doing
The
is...
company doesn't have 45 people in it.
Actually, they have 70 now.
Okay.
Yeah. So what it has said to the CEO is, why do I want to join this company?
Yeah, the culture of acquisition is really strange in lots of ways. Why do big companies acquire small companies? Well, part of it is that the culture of R&D being done inside big companies has dissipated, the labs have gone away, so the only source of innovation and technology is by the ingestion of small companies that are clever. Another reason, a slightly darker reason, is I don't really want this technology, but I don't want my competitor to have it more. Right? So you take them off the street, and then you sort of let them languish. And then the third sort of acquisition strategy is, gee, I have a whole lot of money, I got to do something with it, I guess I better buy somebody. You know, and so I mean, you get all of those reasons, and it sounds a little comical, but you know, it's sort of an equal measure. That's the culture out there, and it's hard to penetrate exactly which one is going on at any one time.
Right here.
Do you have any perspective on the good investments you made, the small sites, and whether or not they do or don't have any track record tied back into the academic world around here? Is that an untapped resource? Is it basically random and sort of irrelevant to your judgments on these folks?
So let me just say very quickly, and these guys will know better, and I'll go back to my DARPA days. I left DARPA to go to the Pentagon about 2000. So I left as acting director, so I knew all of the projects that were going on. Today, the guys that are coming through for investments are building on the technologies that I invested in at DARPA 10 years ago. That's how long it takes for something at the academic level to move through all of the chairs to get to a spot that it can be a viable company. Inevitably, the CEO and his or her predecessor and his or her predecessor in that company have no idea where the technology came from, right? And that's almost a rule. So if I know more about that technology than the CEO does because I was the funder of it 10 years ago, that's fairly standard and almost required. So the disconnect in distance between an academic level sort of idea seems to be the norm of that period of time. Just my observation.
So, and I've been in the business for a long time, 25 plus years. I've seen cycles, and I've never seen the schools, academic institutions, with the exception of the healthcare side, spawn a lot of people. And I think or a lot of companies, the way that Stanford has. And it's not because of lack of trying. I don't think that there has been an aggressive approach by the administrations. I mean, at one time I tried to sit down with Maryland and George Mason and Virginia and talk about trying to set up a collaboration. Nobody wanted it. But I think we've actually had really good luck taking people out of DARPA, taking people out of the various agencies who have some really interesting technical ideas. And they haven't been CEOs, but they've had real success within their organization. So I think the federal government has spawned more companies for us than academic institutions. I think we've had 3 companies out of academic institutions, and none of them have been from me.
I think I largely agree with the only point that I would add is that I do think it ends up being industry specific. So machine learning is an interest of mine. I think just an incredible amount of work has come out of the academic environment. And that's something that you publish a paper and you can implement it. I mean, assuming you have computing resources, which of course is just a totally separate question. So some of those things where you actually don't have to fab, where you don't fab anything, it becomes a question of implementation of an algorithm or of some sort of learning technique, which of course, I mean, machine learning is just a fancy way of saying statistics. But that stuff, I think, you can spur pretty rapid turn of innovation, and you can roll it probably pretty quickly. But in terms of commercializing that technology, I think that's an open question.
So I teach entrepreneurship at Georgetown, the MBAs, and we of course have no engineering school, which really hurts us. So from the standpoint of the ideas coming through the program, we're really hurt by that. And I've flown out to Stanford, met with Steve Blank and others on their faculty, and also gone to MIT to try to understand how to build a better course for myself. And they built really, really great infrastructures that take it all the way through commercialization. And the biggest problem that we have, of course, is the idea, I guess, at Georgetown, but also when you get into the technical disciplines, convincing the founder that they're not the CEO. And in almost every case, that's the problem, or it's a big problem. Because you need somebody that understands how to get that product to market.
Right here.
So in the cyber world, how important is intellectual property? Granted patents?
Yeah, I would say it's very important, although patents in and of themselves, patent processes, I think is totally broken. But I mean, intellectual property is absolutely key. And whether it's in products, obviously it's critically important. I think in the services industry, I said before that Columbia as a rule is generally interested in services type businesses, but only services businesses that are technology enabled or have some unique IP to differentiate them.
So Lee said something earlier, which I subscribe to, which is proprietary advantage. We like hard science deals that solve big problems because you potentially get big companies. It may take a little longer, but we think a robust patent portfolio is very, very important and has value. In fact, even if the company fails, your patent portfolio may have value. I mean, there's one company that was a failure early on, except for the fact it had this robust patent portfolio. We're still getting royalties off of that patent portfolio, and we'll actually probably end up making money out of a bankrupt company. So,
yeah, Roger has it right, and it depends very much on the sector. If, for instance, you're investing in the light emitting diode industry, their patents are supremely important and are the currency of the business. So trading patents back and forth and exchanging license rights is crucial. In the software business, it's less crucial because it's harder to patent those things. I mean, you're going to have to patent some language. But intellectual property written small, the lowercase I, lowercase p, is supremely important because that's the only advantage you have between you and somebody coming in and emulating you in a better form. So intellectual property, the secret sauce, is always going to be important. Whether or not it takes the form of a patent depends largely on what sector you're in.
Right here.
Having come from the West Coast, I was interested in your description of the segmentation of the market, and a little disappointed I'm hearing basically the same thing, which is you describe product and you describe services, and your service description is people in a seat implementing a solution. What is your ideology about services as like identity as a service, identity combined with payments as a service, those sorts of service opportunities?
So I think if you can get to a point where you're differentiated and you have a network effect, then you have a proprietary advantage. But short of that, it's not something we would be interested in. I mean,
yeah, I think that's true. I mean, we invest in services businesses, but there has to be. You have to have some sort of real network. You have to have some sort of differentiator. We are specifically uninterested in a butts and seats type of business like that. The guy serving coffee, I just don't think that they're going to do well. I don't think that those are exciting opportunities.
Just, if I understand it, if you're talking of the sort of Salesforce.com model, they're fabulous because you've created some intellectual property, you just happen to deploy differently. Right. The other comment I'd make is that while I profess that I want to invest in technology product companies, those that face the government markets never get fully there. And it's because they build a technology, they take it into the government says this is really interesting, but you also have to bring people with it to make it work. And probably a good example is Palantir. is they want people surrounding it to do it. So none of my tech companies that I hoped were pure play ever wind up being pure play. And to that perspective, niche services guys that have a product that underlies their service are still very, very interesting.
So I will say I violated everything with the most successful investment I ever made, which was a extended warranty company. No patents, very little technology, good call center business, no risk, laid off risk to an insurance company. When we invested, it was about 20 million. Today it's a $5 billion company, throwing over $1 billion in cash. It was a service business. And we actually looked at it, though, as a play on the mobile electronics market, that we felt that the devices coming out were built to have a life expectancy of 18 months. So we invested sort of as a lark.
The country, it is absolutely crucial. For the security of the nation, it is central. Finding some customers and some acquirers, which is sort of necessary in our business, is really tough, and we haven't broken that nut yet.
No, I mean, big problem, national problem, to Lee's point, same issue. You know, who buys it, type of thing.
Questions? Roger?
I'm just curious your opinions of crowdfunding. Is it actually a wonderful concept that will create a ton of jobs, or is it a job to go for lawyers?
The angels should be more threatened by crowdfunding than us, so I'll...
Go ahead, Jim, you want to take this?
The angels are not threatened by crowdfunding. You know, I hope it has some impact on the market. I'm really worried that a lot of people are going to invest in things that they probably shouldn't, and are going to find the experience to be bad. I hope I'm wrong. Anything that boosts all the things that we need in the economy, including angel and seed investment, using whatever makes sense and is properly protected for the investor, is a great thing.
Yeah, I mean, I think it's interesting, and I hope that it's successful. I mean, it has been to some degree successful in like the lending markets, but you know, we'll see how it plays out. I mean, I'm hopeful, and I hope it does work and increases access.
Helen?
We have, I think, quite a few economic development professionals in the audience, and I would include the university folks in that category as well. What can we do to try to support innovation and entrepreneurship more in this region and in the state?
I think that's a pretty long question that can't be answered here. I mean, I'd be happy to sit down. We've made a big effort. I think what O'Malley did with the venture.
With the Invest Maryland?
I think that will have an impact, but it's a tax, it's a regulatory environment, it's a perception of, you know, what's good for business. I mean, I'm a big believer in what he did, but you got the #2 ranked state for business right across the way, and the tax differential is fairly substantial, and CEOs look at that and think, oh, hard. But it's something that I think needs to be addressed.
So there are two examples that come to mind. One on the West Coast, one on the East. The Silicon Valley is obviously the example of a regional, and there have been books, many tracks written on this, a regional success story. Largely spun out of Stanford, largely at the force of one guy, Terman, that sort of made it happen.
He took the MIT model.
Yeah, he took the MIT model. The other one is more to your point, and is worthy of a lot more study than I've seen, and that's in and around Chapel Hill, Research Triangle Park. That took years to do. It's been very successful, but it's an example of a model that was conceived and executed there with the intent of driving that regional success. So I think that's more apropos of what you have than the Silicon Valley model or even the Boston model that was largely stimulated by DEG and you know, the early computer companies. So I'd get on my horse and ride down to RTP and sort of talk to those guys.
All right, last question.
This issue of crowdfunding, from your perspective, if I have a company that is initially funded by crowdfunding, does that taint me in terms of real funding? I mean, are there issues, legal issues, in terms of the responsibilities to the crowdfunders?
I'm going to clean up the cap table quick. Yeah, the notion of investing in a company that has 500, you know, angel investors, all of which invested $4.25 is not interesting. But if I can get, you know, buy that, then it's irrelevant.
Yeah, what I'd add there is that my first company, I had, you know, I don't know, 15 guys all totally put in $300,000. There was one guy I never should have taken the money from, and he wrote me a letter every day telling me I was doing this wrong. And eventually I personally said, I got to buy out, and you're so distracting to me that I've got to get. So I think you're going to see some of that with the crowdfunding model, and there's nothing worse for an institutional investor than to come in and have a cap table that's got that kind of diversity in it, that kind of interesting possible investors.
But you'll still look at it.
Oh, sure, yeah.
Well, it probably, I mean, I think ultimately it depends on what does the crowdfunding look like, right? If it's Indiegogo or something, somebody's buying a future claim on a product that is yet to be produced. They don't have an equity claim, so, I mean, it just looks fundamentally different, so it's a great point.
Great. With that, we are out of time. I want to thank the panelists. Thank you.